Yo, yo. Yo, yo. Yo, yo. Yo, yo. Let me know if you guys can hear me. Everything's good. If you guys could put a thumbs up in the chat, something like that. If you guys could put a thumbs up in the chat. Let me know if everything's good. You guys can hear me. Let me know if everything's good. You guys can hear me. Testing this for the first time, guys, so I want to make sure everything's good. Let me know if you guys can hear me. Everything's good. You guys can put a thumbs up in the chat. Like that. You guys can put a thumbs up in the chat. Let me know if everything's good. You guys can hear me. Let me know if everything's good. You guys can hear me. So I want to give you guys a breakdown of the markets from this week. It was a decent week. Looking at the S&P 500, that's what I've been trading for months now. I used to trade NAS 100 and US 30, but I've really been favoring the S&P 500. I really like the technicals on it, and it likes to follow in pretty well. So one thing that I want you guys to bring your attention to is when you're trading the S&P 500, what's nice about this index is it's always in an uptrend. So your overall bias when trading the S&P 500, when you're trading NAS 100 or US 30, we're going to be looking to take longs or buys. And what's super nice about the S&P 500 is we had this all-time high from January of 2022. And this past year, we actually broke those all-time highs. So it was broken right around January of this year, which is crazy because last January or 2 Januaries ago, it had its all-time high. Now, January 2024, we're breaking those all-time highs. So realistically, we're pushing up really, really nice right now for the S&P 500. We have a lot of momentum to the upside right now. I want you guys to look at something though. We do have this high right here that was hit yesterday on Thursday. And this candle, today's current daily candle, it's looking like it is going to close bearish. So hypothetically, we could see price push back into these levels right here on our fibs. So right between the zone, we could potentially see price drop down to here, hit that level, and then push off. So next week, we could be looking for more so shorts for the beginning of the week. And then maybe on Wednesday, we could see some type of reversal candle close down here and then see price go up and push even higher. Because as we're seeing price push up and break all-time highs like it did right here, it's going to get exhausted. It can't go up forever and ever. And that's what the S&P 500 has been doing. It's been pushing up, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. So that's what we overall want to be looking for. Now I'm going to give you guys some major gems in this live session right now. I have started using strategy. Excuse the sirens outside, guys. I live in downtown San Diego and it's so loud out here, but I have been using fair value gaps lately and really have been favoring them. So I want you guys to go to your indicators and type in Lux Algo and add the one that says Lux Algo fair value gap right here. After you do that, if you want to go through the settings and play with it, you can. All you really need is the extend on 20. I have mine set like this. It's green for the bullish fair value gap at 30%, and then red for the bearish fair value gap at 30%. So what do we see more of? Red or green fair value gaps? Obviously, we see green because we are in an uptrend. So with these fair value gaps, what you guys want to look at is there's three things to be looking at when you see these fair value gaps. Usually I want to see, and you guys don't really need to know exactly what fair value gaps are. A lot of you probably do. If you want, go look at videos on YouTube, but it's basically an imbalance in price where price leaves a gap. So we can see this green shade. This is our fair value gap. And what I like to see is price retrade into this fair value gap. And that's where I'm going to look to take a position. So usually, let's go back in time. I'm going to mark this up too, so we can go to lower time frames and actually look at this fair value gap right here. So usually when price retrades to this fair value gap, let's go to hourly, I'm looking to take long positions. So when price hits the top of my fair value gap right here, I'm looking to take longs. When it hits the bottom, I'm looking to take longs. And then what you also could do is get your Fibonacci's from the low to high. And right at the 50% level, you can mark that up and look for price to hit that. And you could buy off that level as well. So I'm going to delete my fibs, delete this arrow. So now at this point in time, I can potentially be looking to take, excuse me, delete this. I can be looking to take a buy when price comes down to here, here, or here. And what you could do is two scenarios. You can either have a pending order at these levels, or you can simply go here and set an alert. So if you create an alert, you can mark up these levels. So the first one would be 52.40. I would have an alert there. Then I'd have an alert at 52.16. Then I'd have an alert set at 51.91. So let's play this back. Hypothetically, let's pretend that we see this fair value gap and we want to buy off it. So we would put a long position right here. Stops, usually I have it right below the low of the fair value gap, so right below here. And then for my TP, since we were at all-time highs, usually what I'm doing to really define where my take profit is going to be is I get my fibs from the range. So I go from the low right here to the high. And then I'm aiming for the negative 0.50 level. So here are my fib settings. I don't know why I keep deleting it accidentally. Here are my fib settings. You guys want to take a screenshot right now? Right now. And then also take a screenshot right now. And I will be recording this live. So if you missed it, you can watch it as I upload on my channel in a second. Okay. So our fibs, we're aiming for that negative 0.50 level right there. That's what I'm doing with the S&P 500 because a lot of the time when I do try and find my take profit, I'm going for previous highs or lows, previous market structure. But if that is not relevant, if I can't find a previous high, I find my range that I'm looking at that I'm trading in, and then I measure it with the fibs, and then my TP is at the negative 0.50. So there we go. So hypothetically, we want price to come down and hit this level. We could even have a second position down here, same stop loss and TP, just a different entry. And then we could expect price to go up. So let's play it back. hits our entry right here. We are now active in the trade. And once again, this fair value gap was on the daily time frame. So that's where current price is in the market right now, is right there. So if we go back to the daily time frame, this is ideally what we could be looking at. If you're more of a swing trader, I'm more of an intraday scalp trader. I'm on lower time frames like the minute 15. But if you are trying to swing this, ideally, this 52.16 would be a very, very good price level to be looking at for price to hit. So let's actually do that. Let's go and get an alert. What is it? 52.16.2. Watch this level. So this level is going to be a very important level going into the next week. We kind of want to see price go in here, maybe hit it, and then push off. It could go a little bit deeper since this whole range right here is our fair value gap. And this range for this gap right here, this is 47 points or 477 pips. So we have a massive range right here. So that's something to be looking forward to for the following week for the S&P 500. And this fair value gap is a really, really good tool. Like if we go to the minute 15, you guys can see I'm going to delete this position just because I'm not really looking to take a trade there. You guys can see there weren't many fair value gaps today and yesterday. One thing that I want to point your guys' attention to is if we go to Forex Factory, we actually had, so what I do with my Forex Factory is I go to this filter button and then I only have the high impact news marked up right here. As you guys can see, high impact expected. All the event types are fine. And then for the currencies, I only have USD. Because the S&P 500 is a USD index, that's all I'm really looking to trade. So we can see that Wednesday, we had FOMC, and I do not trade FOMC just because it's such a massive news occurrence. So that news came out at 2 p.m. I'm pretty sure this is PST, it might be EST. So if we go to the chart, we can see, look at 1400. So 12, yep. So that's 2 p.m. 1400 would be 2 p.m. In my time zone, I have it set to New York because I want to be in alignment with the New York stock market. So you guys need to understand that when we had this massive push, like this was not a small push. If we go from the low to the high, let's just go from the end of the New York session, like right in here into Asia. It went up 72 points in 720 pips. That is a massive move. So if you're looking to trade days after that move, like today, Friday, March 22nd, or yesterday, Thursday, March 21st, notice how the market is consolidating. There is nothing going on. You can't identify whether it's going to be a good buy or good sell. Ideally, since price is already pushed up, I would be looking for longs. But look at the reaction that it had on Thursday and even today. It's just all over the place. So you guys need to understand that when we have a major news event like FOMC, CPI, PPBI, when General Powell speaks, unemployment claims, NFP, things like that, the market is not going to have some crazy reaction. And it's not going to have these major moves because there's so much volume that was pushed up into the market this day that the following days aren't going to have as much volume because it's already been put and taken in to consideration on Wednesday. So the next day that I would be looking to trade is most likely Monday or Tuesday, just because that's probably when the market's going to be back into that's probably when the volume is going to be back into the markets. So that's like the update for the S&P 500 this week. Overall, I did catch a long position on Monday though. So I think I was on the 5-minute for Monday. Yeah. So the trade that I took on Monday, I don't know why my fair value gap isn't going back, but sometimes it doesn't have enough data to go that far back in time. But if we were to go with this replay button right here, watch, boom. So we can see we had this fair value gap right here on the 5 minute from this low, this candle's high actually, to this candle's low. And that's where I saw price at the market open. I was right around here. So I'm usually showing up to my computer at like 9:20, 9:25, and that's EST time zone. So right around from like 9:15 to 9:25, I'm getting to my computer in that time frame. So I saw price was already within this fair value gap, and I was actually a buyer, I think right on this candle or this candle when it was lower. So I saw we were in an uptrend. Price hit this higher high, higher low, higher high. All in here is a higher low. And I was like, all right, well, we're definitely going to go and push higher and break this high. And I was buying right in here. And then I think I took it up to this high right up here. So that's the trade that I took on Monday right there using the fair value gap strategy. Very, very simple. If we look at other indexes like NAS 100, they're really all in confluence. Like I would identify US 30 as the overall mothership of indices. So US 30 is going to have the biggest moves, the most volatility. Then it would be NAS 100 and then the S&P 500. So a lot of what's happening in the market when it comes to indexes, you're going to want to look at US 30 first. And one thing that you can do too that will really help you guys out, if you go to dailyfx.com and then you go to Wall Street right here, this is the Dow Jones. And you can see overall the IG sentiment. So you can see how many people are in short positions, how many people are in long positions, and you can just get a lot of data off of right here. You can see the major support resistance, news that's coming out for that pair, all that stuff. So you can see a lot of people are short. What's happening on the Dow Jones, US 30, it's pushing down. So could have got a nice little trade today off one of these. Actually, yeah, this is a nice fair value gap. So I've noticed it like the prime times to trade, and I'll write this out. So let me put like this big. So prime times to trade indices are between, and this is EST. Keep this into consideration. I put eat probably because I'm hungry. Okay, so from 10 a.m. to 11 a.m., this is like the prime time to be looking to trade indices. So I want to spot out something to you guys right here. Look at, so the time, if we mark it up, let's go from this candle right here, because after this candle closes at 9:45 to 10 a.m., that's when the time starts. And then 11 a.m. right here. So right between this window of time, you kind of want to see some type of fair value gap or some setup up here. So we can see we had this fair value gap right here appear. Then did it happen on that candle? Yep, it did. So look right here after this candle or during this candle, let's actually go to a smaller time frame and look at that. So if we go to the 5 minute, at 11:05, between 11:05, actually, yep, from 11:05 to 11:10, it came and retraded in this fair value gap, and you had 1, 2, 3, 4, 5, 6. You had 6 opportunities to take a short position off this fair value gap right here. So where's this? Let's bring this in so we have this note so you guys know what I'm referring to. So right here, we had all these opportunities. Look at price. Dink, sell, dink, sell, dink, sell, dink, sell. You guys, you could have got some really nice positions. So ideally, let's like go back into replay mode. And this is why we have this indicator, the fair value gap indicator by Lux Algo, baby. It'll make it really easy for you guys if you don't know what fair value gaps are. So as we're going down, price forms this fair value gap. And you're going to see fair value gaps form all throughout the morning. But realistically, what you want to do is identify the trend. What trend are we in? We can see on US 30, we're in a clear downtrend, forming lows, breaking support. Like it has a willingness to go down. Okay. Didn't get a retest on this fair value gap right here. Didn't get one right here, barely missed it. And this is the beautiful thing about these fair value gaps is like price will literally hit that fair value gap to a T, and then it will push down. So watch. You're basically like, do you know what? I'm betting if price goes up to here, I'm going to go short. And usually with the fair value gaps, you find the 3 candle pattern. So one, you get the high of this candle, then the low of this candle. Usually the first candle that starts a fair value gap, that's where I have my stops right above it or right below it. So I'd have my stops right there. Then what are we going to do? I'm going to delete this so it's out of the way for us. We're going to look for previous support or lows. So we have like this low right here. We can go right there. And I'm looking at my risk to reward ratio. I usually want a 2-to-1 risk to reward ratio. So that's good right there. Like if we just aim for this low right there, we have a 2.71 risk to reward ratio. Or we could go right down here to this low right here. And look, now we have a 5-to-1 risk to reward ratio. So once you identify like these trades that have the potentiality to give you a 5-to-1, this is when you're like, okay, this is my day where I have the potential to make 5 to 10K instead of normally making like 1 to 2K or whatever you're averaging. These are the days where you're going to be able to actually like make some really good money. So what do? We have our trade set up right here, stop loss in place. And usually guys, when you're trading, this is facts, risk 1, 2, 3% max. You guys, if you are in this industry and you're just trying to get rich right away, you need to find something else. If you're on your last amount of money, your last couple of dollars, and you're like, I'm going to put it in a trading account, I'm going to flip it, you will have better luck at a casino and you'll get your outcome, whether you're going to make and double that money or not, a lot quicker than trading. Let me tell you guys that right now. I tell my students all the time, your main focus should be the evolution of oneself. Because in order for you to be successful in this industry, you need to become a completely different individual. You need to do self-development. And guys, if you want a really good book to read, buy this book off Amazon right here. Trading in the Zone is going to be a magnificent book for all of you to read. So if you want to really see results with your trading, you need to really start working on yourself, because how you do one thing is how you do everything. I live in California and the market opens up at 6:30. Years before that, I used to trade during the Asia and London session because it was too hard to trade during the New York session. I used to tell myself this story. Literally 3 months ago, I would wake up at 6:20 a.m. and go straight to my computer. And I was taking these losses and I started to think to myself, why am I taking losses? I was like, bro, I'm not mentally and physically there. How can I be physically present and mentally present if I woke up 10 minutes before the market opens up? So now what do? I get up at 5 a.m. every single morning. This isn't just Monday through Friday. I'm up at 5 a.m. every single morning. Check my Instagram. If you guys don't follow me on IG, check my Instagram. And I am in the gym. I do cardio. All I do is I'm doing cardio in the gym. I'm doing cardio in the gym for 30 minutes. I'm just walking and I have the incline on like 5, the speed on 3.5 miles per hour. I'm just like getting my body moving, getting my heart pumping. I drink a big glass of water. After I'm done with the gym, it's like 5:35, 5:40. After I'm done, come home, take my dog out to the bathroom. That takes 10 minutes. Then I get in the shower. That takes another 10, 15 minutes to shower, to do my hair, brush my teeth, deodorant, all that stuff. And then I'm ready to trade. So I'm usually in front of my computer at like 6:15 perfectly. I sometimes have a little bit more time before that. But guys, you need to understand that you need a really good morning routine before you trade if you're trading during the New York session. You have to really work on yourself, make sure that your body, you're working out. Like, guys, if you don't have the discipline to eat healthy food, they say that discipline starts by the control of what you put in your mouth. So if you're putting donuts in your mouth, like guys, I love sweets. I used to eat crazy like my sweets, but now I recently have been more cognizant of the food that I'm putting in my mouth because self-discipline really starts with like the food that you put in your mouth. So if you have discipline with your diet, if you have discipline by going to the gym or just working out, that's going to bleed into your trading. But if you don't have discipline in those other areas, it's going to bleed into those areas in a negative way as well. And they say that trading is one of the hardest skills to conquer because so many people in today's society, they're content with being where they are in life. They do not want to push themselves to new levels. And let me tell you guys something right now. I have found that true fulfillment, me as a man, true fulfillment doesn't come from money and materialistic things like this watch right here. It comes from me pushing myself to new levels and becoming a different version of myself, the best version of myself. That's how you guys are going to kill the game. So ideally, we're in this trade. What are we doing? Waiting price to go up to here, waiting for price to go up here, and we want to see it drop. So let's go and play it back. Okay, there's for sure our entry is hit. We're now in a sell. Okay. And one thing that I have been doing too that works extremely well, if you guys watch my YouTube videos, is I get the fibs from my entry to my TP, and I am marking up the 50% level right there. Delete the fibs. So once price goes right here, I have usually an index take off 50%. When price goes and hits this level right here, I'm taking off 50% of my position, and I'm also trailing my stops to my entry. So let's play it back and see what happens. Okay. So now I've hit that 50% level. 50% of my position is closed. My stops are at entry. I'm already in profit for this trade. So if it goes up and hits my stop loss, cool. I already closed with profit. And if it hits my stop loss, I won't lose nor make money. And there's obviously going to be like swap fees or commission, something like that. So you're going to lose like a couple of dollars, but it's not a big deal if you already close with a really nice chunk of profit. And what happens? Price meanders around. Boom. TP is eventually hit. So look at that. Never even comes back to that fair value gap after hitting it that one time. This is just my strategy, what I do. In the duration of this trade, let's say you got in here to here. How long is that? 4 hours and 45 minutes. Are we going to sit here and watch this trade play out all day long? Hell no. If you guys are, you are crazy. For 4 hours and 45 minutes, do you know what you could be doing in that amount of time, guys? A lot of stuff. So, what I like to do, and we'll go back to this right here. Let's say our stops were I don't know why it won't let me drag my stops up. Ooh. Okay, let's just delete this position. I'll give you guys a reference right now. Want to get a short position actually. So usually what I'll do when I'm trading, instead of me having to sit in front of the charts all day, is I have my stop loss level right here in my TP. I usually go to this alert button, just like I showed you guys a second ago, and I put usually 2 or actually 3 alerts because I would have my 50% level halfway through too. So if I go right here, 50% level, boom, delete my fibs. Guys, I'm not crying, by the way. My eyes are so sensitive right now. I think it's a sunscreen. So I'm going to have 3 alerts. And usually I like to make the first alert for my take profit versus my stop loss because I feel like it's just good luck. So right here, 39,621. And then I'm usually just going right here, deleting this and put TP hit, create 1 alert. Okay. Then I'm going to go back. What's the next one? Stop loss 39,694. Stop loss it. Great. And my 50% level is at 39,646. Okay. And I usually, for the 50% level, I'll just put 50% level hit or something like that. So now I have 3 alerts for this trade. So hypothetically, let's pretend, I don't know if it would show us it. Yeah, it won't show us the alerts. I want you guys to see those alerts. So I have my alert set. So instead of me, I could still be in my house working on other things, or I could do it on my phone. But instead of me staring at my charts, I have my alert set. So once it hits my 50% level, boom, I'm on my phone, going through, doing this, doing that, getting it all set up so it's good. And then I'm going when it hits my TP, making sure my position's closed and doing whatever else I have to do. So that's what I wanted to teach you guys in this video. I hope that you guys got value. And rewatch this video. If you came on here late, rewatch this video because I dropped some massive gems in this video. There's some very powerful information here. See you guys later. And I'm also going to be streaming, doing these lives pretty much every day, helping you guys out. So let's get it, guys. Talk soon. Peace.